we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets. I haven't been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone. You know,
but isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets. Welcome everyone to the Kendall Report. It is Monday, and I hope everybody's enjoying their holiday here, what's left of it in the U.S. And I see somebody made the mistake of looking for me yesterday. Didn't work out real well, sorry about that. Anyway, folks, I'm going to do a longer term outlook tonight, as I always do in the first of the month. Because we had Friday's action, I actually have the ability to see the beginning of this quarter and of this month that will show me the quarterly update. So I think we'll be able to get some pretty good analytics tonight as we finish off this final month. We got Fed coming up. We've got a whole bunch of stuff, and I'll discuss an overview of all of this. Before I get into this, though, thank you everyone for purchasing the indicators. They're still available. Yeah, the discount is gone, but they're still very valuable. And it's in the real terms, it's not. I think the ability for you to have these things on your desktop is going to be absolutely amazing. I'm also going to be announcing a symposium we're going to do. It's probably going to, I'm not sure, I'm not going to tell you too much because I spent the whole weekend and doing things. So I just got the bad echo issue, and that's over right now. I forgot I had something hooked up, so sorry about that. But yeah, we're looking at, I think, a really, coming into October is when I'm planning on this. It's going to be an online symposium, basically a master class. I worked pretty much all weekend on designing this. We also have some webinars and things coming out that we're going to be doing. So keep paying attention here and get these indicators. For the symposium, it's going to be mandatory that you have the right tools to get in the door on that. So I'll tell you about all those details. It's a lot to put together yet, so appreciate it again. And one other mention, the fact that the discounts are over on the indicators doesn't mean our customer appreciation discount is gone. In fact, if you did buy the first version, just send us an email. We have a new promotional code that we're glad to give to you for for being a loyal customer, and we appreciate that. So enough of the advertisement. So let's get on to tonight's video. So this is the final month of the quarter, and I think as I was talking, if you went back maybe 2 or 3, let's say go back to the beginning of the year, first quarter, second quarter, there was something I was talking about getting this 3-quarter rebound, and that was going to put us right to where we're sitting right now. It's interesting to look at what's going on in the metrics, because they're still suggesting there's more to look forward to, and primarily in the Wavetech database, as you'll see when I go through that in a minute. There's still a lot of positives going on here, folks. This thing is not done at all, and we still have some upward sequence to go. Whether we get to an all-time new high this year, that's hard to call at the moment, but we do see a continuation of the pattern that's been going on for a while. So maybe a little consolidation. I'll set that up the best I can. We got a short week ahead of us, so I should have, to the best of my knowledge, I will be here every day for the rest of the week, so including into Thursday's broadcast. So let's just look back in the rearview mirror for a minute. S&P last week was up 2.5%, up 17.6 on the year. NASDAQ up 3.2% last week, up 34.1, and Russell was up, actually outperformed a little bit, up 3.6%, up 9.1 on the year. And the banks basically did better. That had a lot to do with everything. And so, pretty good week as we look back, including we had employment, we had a bunch of stuff come out that everything seemed to stack up in a good way. So let's take a look. Let's talk about employment numbers that came out. They came in at 187. Unemployment ticked up to 3.8, and they were expected to be around 3.6. So it was a little more than expected. And it's really interesting to me. I'm just going to segue into a little bit of Fed talk here for just a minute, because it's interesting to me that the markets so want the Fed to stop that they just will grab at any straw going, okay, that's it. They're not going to do anything. We have the Fed meeting on the, let's see here, 19th and the 20th of this month, and I still am in the camp that they're going to raise another 25 basis points. And the reason why they're going to do this is, even though these metrics are improving, they have to do this. I told you before in the last couple months that after the last meeting that they're going to raise one more time. They don't want anyone to think they're on every other meeting or in a pause. They don't want that yet. I do not believe they want that. Maybe that's what happens. It's anyone's guess. But I'm sticking with the fact that I think they're going to keep the rates moving a little bit higher. I still think we have to get to that terminal rate 5.5 plus. And there's still a lot of things out there that are pointing to the potential for a little bit of a reemergence of inflation and those type of things. So we're going to keep an eye on all this stuff, folks. So let's take a look at a couple things here. Let's take a look at what's coming out tomorrow. We have factory orders. Factory orders, anything with factory manufacturing has been weaker. Last week we're starting to see possibly the manufacturing sector beginning to stabilize. It's just slightly under 50, is that I think came in at 47.6 on the ISM manufacturing the other day. So we're just looking at this thing really starting to stabilize here. But we have factory orders coming out. They're expected to be down 2.2%. Maybe they come in a little better. I've been looking at some of the PMIs and some of the other metrics coming, even out of Europe, is coming in a little better than expected. There's some things going on in China that they're starting to already step up and start to stimulate some of this real estate stuff that everybody was worried about and I warned you about that there are no moral hazards in the communist environment. They do whatever they want to do and when they want to do it, and they're not going to let the whole place go down the tube because they're worried about what somebody thinks. They don't have those issues. So let's. So we look at factory orders on tomorrow, Tuesday, and then we'll have on Wednesday. We got mortgage apps coming. I think they could be up. Even that little downtick in interest that we got last month, there was a little bit of a blip. Maybe that everybody's got their finger ready to put in a mortgage app and try to lock in these rates. We also on Wednesday have ISM non-manufacturing. It's expected to be around 51, and I've talked about this before. As you look at the economy, all of anything to do with non-manufacturing is over 50, 51, 54, nothing super robust, but not in contraction territory. And anything in manufacturing is slightly under 50, but it's not even a disaster by any means. Then we have consumer, let's see here. Then on Thursday, we got typical claims, 236, continuing claims upticked a little bit, 1.725. I started to bring up a chart on this. I do have a chart, and it's basically, it's back to normalization. If you went back, I think as far back as 2016, prior to the pandemic, we've just returned back to about where the levels are here now. And these type of claim numbers are nowhere near what you would start to call any type of recession or anything like that. You would have to be printing 400K plus numbers to be in a recessionary environment. We're not nowhere close to that. In fact, it's been stable here for a while around this 2.25 level, plus or minus a little bit. So there's not anything there to put your finger on and be worried about the economy sliding too far anytime soon. There's plenty of mixed signals around, but for the most part, it's pretty stable. We get also productivity is coming out on Thursday. And last time we were at 3.4, the previous. This is a pretty important number. I'm in the camp on the AI. I know there's people who think AI is a bubble, and that just seems to be the thing to say. But I can tell you AI is real, and it's going to be a part of a lot of things that are going on. So you're going to see the continuation of the NVIDIA rally and all the positive things that are happening out there in AI, and everybody trying to buy AI chips anyway. And so really that productivity number is going to be an interesting one to watch, because I'm in the camp that believes that productivity could increase substantially, maybe not tomorrow, but over the next several years, that this could be something that is a big, big game changer. And anybody who knows anything about economics 101 knows that productivity is the biggest multiplier. If you want GDP to increase, you just need to get productivity up. And if last month it was 3.4, but you could start seeing some really crazy numbers as we go forward, because I think a lot of folks are starting to deploy AI into their businesses. I know we're working on a ChatGPT API program right now to help with database mining, some things and metrics on the Wavetech database, and some other things that I'm just looking into, starting to research, and we're finding some potential big time opportunities here, I believe. And anyway, that'll be a subject for another time. But I think productivity is going to continue to grow and to get better in spite of whatever else is going on out here. You have to understand that most of the financial news is noise. Everybody's got an agenda, no matter who they are. So just know everybody talks their book, including me. That's what, I talk about the database and the traction that we have. If you're not talking your book, then you're not very good. That's what everybody does. Now, whatever the other agendas out there are from the standpoint of financial media, you'd have to try to figure that out, and that's kind of a waste of time in itself. But we're definitely, this productivity thing is going to be something to watch pretty closely. And then I think on Friday we have consumer credit. That's been a dialogue around it, about people talking about things are weakening, people are financing food, whatever it is, and I'm sure they are. But you have to understand that the economy is expanding. Actually, population is expanding. Who knows what the folks that are coming across the border, whether they're expanding any credit or not. Maybe they don't have any. Maybe they got credit cards back home and they're still using them. Who knows, folks? Anything's possible. There could be still things going on there. But I think overall, the economy is going to keep on rolling forward. It doesn't look like to me it's going to tip over at any time soon. And this has been kind of a dialogue, and I'm going to go through the Wavetech database next. And this is the only point this week that I have a real-time snapshot for you, so I can give you some insight on what's going on. And pretty much everything I told you last week is true. So let's go ahead and get into tonight's video, because there's a lot to cover. I'll be going through all the way into quarterly charts, and we'll focus in on the S&P tonight. So we should be able to get done in our normal length of time, usually about 1 hour. So let's go ahead and get into the database. All right, so let's start here with the weekly. We managed to tick up to 62.87. We had 550 buys, 167 sells. We continue to see a positive rotation as we come in here. We look out at the models in general. Let me just go full screen here so you can see on this. Over on the far right, we are currently, you have to look, I'll put a cursor here, the optimized weekly column. Right now, the average profit that we earn on these signals is 30% gain. But let's take a look at where we are right now. The average current duration is 65 days. The average holding is around 204 days. So we are a long ways. We unlikely to hit 204, but I suspect we'll get into 170 to 180, and that is very possibly, that will shift us in another, we'll call it another 80 plus, maybe as many as 100 trading days looking forward. And that puts us out, folks, well into the end of the year and probably into January, that this outlook is going to continue to be forward-looking, and that there's still going to be more possibilities on the upside from there. Now we're at 62.87%. We did get up into that 70 handle, so we backed off a little bit, but we've already stabilized. And it's absolutely amazing. I talked about this. Let's go ahead and go over to the daily. The daily shows 47.67. You remember we actually got into what I call full liquidation mode, and which put us down into that 14%. We've rebounded all the way back into a solid mode where we got enough traction here to get to 47.67% long in the database. So all of a sudden we have 7,400 symbols. Just about 50% of the symbols that we follow every day. And absolutely amazing. I discussed this the other day, that what we're seeing in the database, even when we got up to around 82% bullish on that previous rally. We backed all the way down to 15 really quick. I think it was about 3 weeks. And then we stabilized for a little bit down there. And I remember when we got our first uptick, this thing has been absolutely spot on from the standpoint of what these turns. And, you know, it's frustrating to me, and I hate to mention every night that at least tonight I have actual live stats. Tomorrow night I won't have the updated numbers, but you get a sense of where it's going, and that's what I wanted to be able to talk with you tonight, is just to get an idea that we are seeing an amazing improvement. And unless we see some big hiccups, a big downside or something like that, you're not going to see anything really negative. And the fact is, just flashing back just for a second, let's go back to weekly, go back full screen here. On the weekly, we're really, as we look at this, you know, we're at 62.87, and this is not a point where markets are going to turn around. You've got way too many symbols. You get almost 10,000 symbols in trend mode to the upside. This is not how it works, where we're going to get some big giant turnover and it's going to roll down. We're going to get some big selling and all this stuff. And there's still some folks expecting that, but that's not going to be the case here, folks, at all. So, you know, you're looking at, if you look at the stats here in the middle, I'll try to put a cursor on it here, just to move around, but everything's bullish that came out of the database for today. So good ratios on the weekly, not a lot of buys, but look at the buys on the daily, 2,479 buys for Tuesday morning. So this is a really big, and this is you know, this is just a pretty typical situation here from that standpoint. So let's go ahead and move on, and let's get into the technicals. So this might be we'll start off with the hourly chart. We'll start off like we always do, and then we'll switch over and get into the longer term ideas. So let's take a look at the hourly chart. Look at this nice upslope we still have. And this is daily, so my bad. Now we have it up there. Let's try it again. But it's still, we've got a little flat spot and then more upside as we come in. And it's somewhat interesting because there's going to be a bit of a conflict when I go through the daily here in a minute. There's still upward bias, but it looks like we could flatten off here for a day or so. So we'll see what actually occurs. And you know, the volatility and some of the, I guess, the surges that we've been seeing in the market sometimes will set up for some kind of a whipsawing action. Now, there's an argument here on this hourly chart that this is a wave 4, and we've got one more wave up, and this is probably the right way to look at it from that standpoint. And so you can see the algos are all turning up here on ppm 1, 2, and 3, and I need to fix something here, folks. So bear with me while I do this, and you can actually I need to take something off. There's something got missed here. I'm going to take these indicators off, put them back up. So we come up here and we're going to put in ppm 1, ppm 2, ppm 3, and then ppm 200. So I want to get that stack right. And in fact, just for the record here, this typical stack is, for those of you that have the indicators, this is just gives a great view. I'm working on, this is one of the things in the master class that I'm going to be talking about, is how to compile these together into signals and those type of things that are really going to be helpful. So you can see here that it looks like we get a little flat period, and it looks to me, as we're looking here, that we're probably looking at maybe into the open, maybe staying flat to a little bit down. Right now we're looking at the S&P's down 0.25, basically flat, nothing's going on. So it looks like we drift around. We got a little bit of a rally maybe coming in to the open, and that probably will keep us going. And I've been noticing, folks, that almost every morning, especially if you're trading down into the US Open, there's like this bid that comes in and they run this thing, anywhere from 5 to 10 handles, and then there's crazy volatility after that. And that's it. Yeah, I am doing right now I'm doing the S&P cash. That's kind of the theme I'm on here because of the longer term. Let me convert it over to ES just for a second, because it is a little bit different here outlook. So let's just thanks for the heads up on that. That was helpful. So yeah, so what we're looking at here, very good call. What we're looking at here is into, of course, London is kind of the bottom, and then a rally into that opening tomorrow. So that looks like the pattern is unfolding. I really appreciate you catching that on the SPX, because I'm going to use that for the quarterly and monthly charts. So I appreciate that. Glad I caught that on screen there. But the pattern is setting up here is pretty typical. Looks like I said, somewhere as we come in around the open, we should see some strength coming into the open and start to see a push up. Let's go ahead and go to the daily, and then we'll get into the longer term thoughts on what's going on here. I mentioned the other day we got this updated fib targets to the upside, and we got 45.88. Let me just get these numbers: 45.88, 46.73, and 47.26. That's where these green dots are. The futures are suggesting we have a little bit of sideways, but really stability around trend mode here on the futures. So we should climb up this range here as we come into this. I keep talking about the third week of September, which makes sense now, because that's where the Fed meeting is coming in. So expect to see some kind of maybe climactic pattern set up into that. So let's take a look at PPM2 here, which I think is interesting. This is daily chart we're looking at now, and this is the E-minis, the ES. And so we're looking like we're going to continue to see a sustained move and see the momentum start to move up. So look at those moving averages as the key point to look at. And I made some notes here on my pre-meeting review that I did, and looks like 44.85, 44.50 is going to be extreme levels. If there's any weakness that comes in, if we print down there, that's going to be your buy the dip level. If you remember, 43.50 was the exact low that I was talking about being extreme last time. Now in this pattern, it's 43.50, and we've seen this type of pattern for a while, where we get these 100-point range, like 43.50, 45, or 40, 43.50, 44.50. Now we're probably 44.50, 45.50. We've been kind of capping out right in that range. And it doesn't look like, maybe if we look at these fib targets here, 45.88 is extreme. And I don't know if we can print a 46 handle here. I don't think we can do it this week. I think as we finish this week, we get closer to the Fed meeting, we'll see what kind of rhetoric starts to flow around, because there is a pretty good contingent of folks that are talking about the Fed pausing, and the algos pick up some stories and maybe we can get things going. One of the things that we've seen, which is a joke when it happened, and it's even a bigger joke now, and we'll talk a little bit more about it when we get into the treasuries tonight, but this whole Fitch and Moody's coming out with downgrading U.S. debt and all this stuff. I'm telling you, those were nothing more than headline grabbers. Those are clickbait. They set it up. They wanted to be part of the narrative. And, these guys haven't gotten anything right for a very long time. They're pretty much like, if you follow any of the big institutional people, they're just really, really bad. Especially the Goldmans and those guys. It's almost like they put out this information while they're trying to off their inventory on everyone. Anyway, I won't go into the conspiracy of that. But this pattern here on the daily does have an upward slope, and it's kind of, basically it's gotten a little bit more pronounced over the last several days. I have the algo set for 150 coefficient look back. And you can see they're really just looking at the stabilization of these PPMs here. All right, so I'm going to flip over now, and let's do one more thing. Let's do a weekly chart here. And something I don't have up here, which I should have, is the market grid. Let me go back to the daily and let's talk about the market grid, because I did not mention that earlier. Let's take a look at it here. So from a market grid standpoint, there's something else that stands out on this chart. There's a pivot, and it's that 4494 number that I talked to you about before. It is 4494.15 to be exact. That is the number to watch. If we do close under that number, that could indicate a little more downside, the potential coming down in a little bit lower, maybe getting down toward that 44.65, 45.50. That would be your signal if we were able to close under that level. And so that also sets up maybe like a little right shoulder in here, a couple of things that could happen. But my expectation is that we will hold this 10-period moving average right now, which is 44.67, and that will be the key level. But that 44.94 is still a valid pivot. It's still in there. So if we get a close under there, that sets up the 43.65, 43.50 move down. But we should be able to hold anything that gets down in that level. You can see what it looks like here. This is still the futures. It looks like we got some potential loss of momentum as we come into Thursday's markets. But all that tells us is that we could sit down and test some of those numbers. So let's look at the market grid real quick here. For Tuesday, we're looking at right now maybe S1, R2, which is 45.13, 45.38. R3 is 47. RXT is 45.56. On the downside, S2, 45.04. And then you can see S3 is right at that 44.94 pivot. So that would be an absolute extreme. My expectation was S1, R2 for Tuesday's action. All right, let's go into a weekly real quick, because I do like to put the weekly grid numbers out there as well. We have a couple of things to look at. The 10-period moving average on the weekly is 44.94, which is that pivot. And we have the potential, it looks like, in the next couple of weeks for a little bit of momentum boost. But this angle of attack that's going on here on the weekly still looks very solid, and we should have that upward slope as we move down the trail. I mean, look at this. I mean, this on a weekly basis, we're looking right into year end, still having an upward bias. So the downside is going to be very muted, very limited. It's just a matter of being able to get through some of this stuff. I did something kind of interesting. I thought maybe I should make a video on this, but I'll just share it with you at this point before we get into the longer term outlook here and start to look at these monthly and quarterly charts. One thing I did today is I went back to around 1983. As most of you know, I started in the markets in 1979, so I was kind of reliving, but I wanted to see how the algos did and how the AR, the auto regression math that is put into both the PPMs and the moving averages now, how they did during those periods of time. And going back to the 87, then there was an 89, there was what we call the big crash in 87, and then the mini crash in 89. And then, of course, we had another snafu in the early 90s. And then 96, everybody knows about dot-com bust and all that. But I was just kind of it was sort of like watching a movie. I was just moved the chart back so I could watch the algos work step by step as they went through. And I ran through some of this longer term stuff, and it was very interesting. And what it looked like, it did a really good job at forecasting some of these big moves, and both up and down. And one of the things going back to, I want to say, is probably around 1994, coming into that 2000, into that high, it was pretty obvious that the algos were actually predicting that things would go substantially higher. And and we know that that's what happened. Of course, like I said, I'm going to go through and show you some things because the algos are suggesting there's still a lot higher prices in market. I remember back, folks, some of you have been around the channel a long time, just a few more comments here, been around the channel a long time, but one of the things that is a really good inflation hedge is the stock market. And so it's not necessarily super negative to have inflation around. In fact, inflation was a positive going all the way through the 80s. I mean, that's where we went from, I'm rounding off, you can correct me if you want, but somewhere around, we got down to, Dow Jones wise, because that's what is coming to mind, around 600, and we were on our way to 3,600 going into 1987 and a little bit before. So, you're looking at, you're just looking at these long-term trends. You can start to see how some things is going on. So let's take a look at, let's go ahead and start digging into the monthly. I'm also going to switch over to SPX here. And so we're going to have some really long-term things going on here. And I think this will clarify what's going on. Now, we do not have any upward Fibonacci targets here. We do have upward angle of attack. We do have solid trends in place. We have a number of things, and it does look like over the next, if we look out here coming into around the end of the year, that there is some potential momentum burst where we get through first and second derivative on PPM2 here. You can see this line being forecasted. PPM1 is at a very robust 1.03. And I just showed you the probability chart the other day. When you get into this 1.03, you get that suggests a forecast for a extended move. This is certainly an extended move. We go back all the way back to 2022. I mean, think about all the negative comments between where this low was, this reversal low in October of 22, which would be when the database on a weekly basis started to get a lot of traction, if you remember. And I was screaming about, hey, we're starting to get traction. We came into the first of the year. It looked like 23 was going to be a pretty positive year. And like I said a minute ago, NASDAQ's up 34.1, S&P up 17.6. And those are pretty positive years, right? So we still have some upward slope. Doesn't mean we can't come back in a little bit before moving higher, but we do have some upward slope. And PPM1, while it's down tick, is still at a robust 1.03. PPM2 is right now at a 0.82, which is almost coming into that one factor, the whole integer number. Once we get in those whole numbers, it starts to get fairly crazy here. But we're looking at the forecast as we get into first quarter of next year, looking at the potential for a pretty decent move to the upside as we come into first quarter. And I know I misquoted something. I said there hasn't been any recessions during presidential election years, and there's been plenty of them, actually. There's been several. And you can go back to 1980 when I started in the market. So when Ronald Reagan was coming into play. But the point is that the patterns that are here do suggest that we have upward surges coming, not just a positive angle of attack, but we have the potential for a little bit of a surge. So it looks like as we come into the end of the year, if I were forecasting out, which I'll say I am right now, and we'll go through the quarterly here in a minute, that everything looks positive as we come into year end. And so for whatever reason, things are looking pretty solid. And that also is the case as we look at the macroeconomics. Like I said, doesn't appear to be any signs of anything that looks or acts or even is going to be like a recession. And I keep seeing these people like getting ready for the recession. Now, I am going to back up and just hedge just a little bit here, because as we if you look at the forecast for the PPMs as we get beyond the first quarter coming into second quarter next year, things start to look a little sketchy, like maybe prices could be testing some of these support levels, but I still think overall we're going to climb this angle of attack, and that the 10-month moving average is going to be one of the key levels to watch as we go forward. So let's go to the next level. So this is SPX cash here. Now we're going to the 3-month. And it was interesting, and I'm going to kind of recap. If we go back in 2021, if you go back to the first quarter of 22, we got an outside reversal. And I mentioned then if we close lower at the end of the quarter and we made a lower low in Q2, that we would get at least 3 quarters down. We got exactly 3 quarters down. We got a reversal quarter as we came in October of last year. That was the reversal. And now I thought we'd get at least 3 bars up. Well, we're working 4 bars up right now. The only thing that's happening here on the quarterlies that needs to be noted is that momentum is still burning off. But this thing is like, if I just go a few bars out, I mean, we're already, 4 or 5 bars out, you're into 2025 and beyond. And it looks like we're flattening out here, but it looks stable going forward. It doesn't look like things are going into a collapse. Now, all of these algos and everything are going to update as we go forward. So the current forecast, how things look right now, look pretty solid. And even if we look at the worst of the momentum, it does suggest that we could get below the 10 period moving average on the quarterly chart, and that's 42.18. But hold up for a second, because that number is going up right now at about 50 handles per quarter. So as we come in, that's going to be a high 42 handle, 70, and then very quickly in January, we're all of a sudden into a 43.5 plus, which would be the lows that we just rendered. Okay, so those are going to be things that we're going to watch as we go forward here, because this is the classic of where it's going. And I realize I haven't been really going on and on, folks, because we're 46 minutes into tonight's broadcast. I'm still on the S&P. Okay, so once I get beyond this, I'm setting all these longer term trends up. I will reference them as I go forward. But I knew this was probably going to be a popcorn night. So, you still have time to throw a bag in the microwave. But this whole pattern that's unfolding here is exactly what looks like is we're going to get stability, and that stability is going to be around that 43 handle. So I think that's probably the most interesting part when I was looking at these long-term charts and wanting to share this analysis with you, is it looks like we have some stability around 4,300 being the basement, which is quite a ways up. If you look at where we were, of course, we printed 3502 at the lows, right? I think if we come over here, I think it might be just a touch under here. If I look at the actual quarterly low on the cash, 34.91 was the cash low. 35.02 was the futures low, I believe. And so what we're looking at here is this rebound. And this is one of the reasons why I went and ran the algos and wanted to see what 87 looked like, because this potential setup is setting up for a potential right shoulder to set up. If this market fails here, then we get into a catastrophic type of scenario. I'm just going to paint this out really quick. I'm going to bring up and draw this in, because when I was going through this stuff, it would be irresponsible not to mention this. All right, so this is the big pattern, right? Let me reverse all this. Let me take all this off here. So you really have kind of a wave 3 pattern here. And I had ran across a wave count that I did. So this potentially was an A wave. This could be a B wave, and then a C down to this 21 period moving average. And that would make sense. The only thing that we have going here is all the algos are projecting, and we're talking out 2029, 2030. These are very long trends that we're looking at. This is what I was saying here. Probably around 4,300 is somewhere in these ranges is where we get some kind of pattern set up. So you get maybe some kind of elongated pattern, and all of a sudden you're in 2030. And, it's one of those things where we just, as you watch and you look at these long term, what's the point of looking at it? What it really tells us is that what I'm not seeing is that. Okay, I'm not seeing the big giant collapse. And when I looked at the 1987, the 89, the 2000, the 2008 patterns when I went through that scenario today, none of the setup was completely different at each one of those rollover points. This is not the setup. And I also lived through the database. I've been watching the database that I talked to you folks about every night since 1998, right? So we're looking at 25 years I've had that database in my life. So it's been really, really interesting. But I don't see this as an analog to 87. I don't see any of the potential there. Anything's possible, but I think at least with that upward slope since this is a 3-month quarterly, the upward slope on that 21 period moving average is high enough, meaning the probability factors that are on that are high enough that at least will support if that number was reached. And let me take this off here and let me tell you what that number is and what it's doing as we go through. So we're looking at right now, the 21 quarter moving average is 36.36, and it's going up at roughly, we're just going to round off and say it's going up 100 points per quarter. So a year from now, it will be 4,000. So if we just start pushing things out, but my point is that would be the extreme, and 4,000 is a long ways from 3,500. So that low that we printed down here, that would be the perfect scenario where we get a little ABC, maybe get like a double zigzag, ABC, X, ABC, and we consolidate here. Well, maybe at some stage there actually is austerity and paying down debt and stop spending money. Maybe that we get into some new economic scenario that happens there. Is after. I have no idea, Gino, what you're talking about. I changed my trends a few days after making them. I have no idea what you're talking about. Anyway, these trends are well in place, and I'm just expecting to see them continue to climb along this angle of attack. Finally done with the S&P. Let's move on to the NASDAQ. Now, I'll keep this fairly short term for the rest of the show. We're in this thing 52 minutes, so I got a lot to cover here. So it's probably going to be about another 15 minutes to get through here. All right. And I see somebody making a comment on the Airbnb. I ran across something this weekend. I wish I could come back on camera. I guess I could just for a second before we go into the rest of this. Sorry, folks. Just real quick here. I'll come back up just quickly. I saw something really interesting. I'm trying to research it. I use Realtor.com to try to track trends in different markets, both for just listings. I grab a whole bunch of listings, different price ranges, and see what kind of notifications I get for decreases. One of the things that I ran across in Phoenix market, we'll call it Scottsdale market, is that rents look like they're plummeting on individual homes. I'm trying to find out if these numbers I was seeing over the yesterday when I review these things, every so often it just came up on my mind. And when I saw this, I thought, wait a minute. I mean, we're talking like major reductions in rent. And I'm going to watch and see if it was some kind of glitch in their system or something. I've not seen anything like this, but it was literally some of the higher end stuff that was up around $8,000 had dropped $2,000 per month. I mean, crazy numbers. Many of them $500, $1,200, and some of the, even in some of the lower markets, we're seeing hundreds of dollars of reduction. So I don't know if there's some kind of algorithm snafu in Realtor.com. I have no idea, but I'm just mentioning Airbnb probably isn't going to collapse the market. I know I've heard that scenario, how all these people are upside down. If you took matter of fact, just a quick note on the housing. Right now, almost 40% of every house in this country has no mortgage. Something like another 35% have mortgages that are between 2 and 4%, and very few are at risk. We're not in 2008, folks. There's no scenario you can come up with. And don't forget, BlackRock and all these guys bought a lot of the houses. So most of the houses, a good portion of the markets are in really strong hands, and we don't have the scenario that people are talking about, because there must have been 2 million videos on the coming real estate crash that never happened. Sorry, loud vehicles going by. But yeah, I just wanted to come up on that. It's hard to believe I'm at 56 minutes in on this show. So I'm going to go really quick through NASDAQ, going really quick through all the other markets. And I think what I'll do is do NASDAQ, I'll do interest rates, we'll touch on crude oil, and I'll do a quick Bitcoin, and we're just going to be out of here. It'll take me about maybe 10 to 15 minutes tops. So let's go ahead and get into that. All right, let's start with the daily. Daily showing a little bit of weakness coming in. Oh, I see. Airbnb, the stock might be in trouble, but it's not going to roll the entire real estate market over. Gotcha on that. Thank you. Yeah, so the issue that's I'm looking at here from the NASDAQ is we still have a pretty good angle of attack, but it looks like we have a potential for a bit of a backfilling. This is a little more prevalent than it is on the S&P on a short-term analysis. So we're looking at the potential here. We look at the market grid real quick, is what we're looking at here is for S1, 15,475, 14,530, R1. R1 is 1556 and 602 on R2. So look for obviously a little more volatility, but there could be some downside, but it looks like everything's going to hold. What's happening here is we are starting to see an acceleration on the upside in the PPM2, which is interesting because it's basically the lowest moving average in the pattern right now is that 15,177. You saw that number. That's your buy the dip number. Let's go to a weekly chart. Once again, still have some pretty decent support. Weekly is stabilizing here. We got down to that extreme. We got right into those fib targets, and it looks like we're coming back toward this 10-period moving average, 15,347. That number I just gave you on the daily is the one to watch. So we're skipping Russell tonight. We're going right to I am going right to the interest rates here right now. All right, so going to treasuries, 10-year, starting to show some softness here and starting to roll over from a sorry about that. I get some loud vehicles in front of the office once in a while, but looks like we still have a slight angle of attack. We're a pretty decent number here, 1.01. So we should see right where we bounced the other day. There's two things happening there. There's a fib target on the downside that's sitting right there, but we also have the 10-period moving average at 403. The low, if we look at the pattern here, 40, let me just get this number. 4.06 was the low. We should hold along this line as we go through this week. It is forecasting as we come into the Fed meeting a slight downtick, and maybe we can get through this 10-period moving average. Everything looks like it wants to roll back in, and the extreme support will be the 21-period moving average in here, and that's way down at 382, but it's rising at about 4 ticks per day. And so what we're getting per week, so we're going to be about, we'll call it 20 basis points higher from where it is right now as we go through this pattern. So you'll be right at the 4% level is going to be a pretty solid support as we walk this forward. Yeah, I think what we're going to have, I see somebody commenting S&P strong, but NASDAQ weak tomorrow. I think on a relative basis, the NASDAQ could have some weakness, and the S&P may follow through with it. But it's completely flat on the market. Very, very, very quiet on the holiday night so far tonight. All right, I'm going to fly through the rest of this thing tonight. So we'll do crude oil. We'll get out of here pretty quick. But the crude oil, we got this big bounce at the end of the week. Let's go over to the daily because that is where it really shows. As you'll see, we got this nice surge coming into the week. We had some fib targets up there, and the fib targets are coming right into 80. This 87 handle that I've been talking about for a while. We almost got an RTX sell signal, but this upward slope is likely to continue through most of this week. And I would look just for it to work within the grid. Let's take a quick look at the weekly. This is, we did get a RTX sell on the weekly. So look for sideways, probably looking at here. Let me bring up the market grid weekly. Probably looking at potential S1 8436, 8303 is probably the bottom line. And then on the upside, you still have some potential for 88, even 8940 on the upside to be within that range. Next, we'll cover gold, and gold is right at that resistance point I've been talking about. We're probably going to come back in the range, work our way back but toward the 1925 level. You look at the moving averages, we're probably going to get 1933 is the 40. Probably look at within the market grid range right now is 85 as a peak. Would be R2, S2, 48, and looks like all the way down to potential down to STX is possible here. And it may have, may be more stable than that. I would go on this is a weekly gold chart. I would go with the intermediate there between probably S2, 1948, R2, 1985. Look for that range for the week. Yeah, over the long weekend, we did see some pressure on, this is the weekly Bitcoin. We did see some pressure come in here. right down to that 40, and the 40 is still fairly solid. We got a plus 0.85 on ppm3. We should hold along this line, probably bounce back towards the 200 and the 10. Those values are 27,679 and 28,212. So I expect we'll stay right in that range. I don't think we break down, but there is a Fibonacci target down below here at Fib target 2, 23,140. That would be your extreme, but we're also looking at the market grid on here is 23,198 is STX, so it's right there as well. So there could be some decent downside on Bitcoin as we come through this week, but it should hold here. If it breaks down, then look for that extreme to be hit. Okay, folks, this is going to do it for tonight. Got really long-winded on some of this stuff, but hopefully that was helpful, that longer-term outlook. And we'll get into the rest of the week with a roll and keep everything moving forward. So, like I said, I should be here all week. Don't see any interruptions. So I look forward to seeing you folks same time tomorrow night. See you then. Take care. Have a good day trading. And oh yeah, don't forget to subscribe, hit the like button. I haven't given you folks good instructions lately, but you know what to do. Thanks again for watching.